Okay, so SFR, is that one of your stocks of the week or your stock of the week?
It is the only one, yeah. My stock of the week. Do you want to go through it now?
Yeah. Tell me what you got.
So Sandfire Resources, SFR, it's been on the buy list for a long time. It came off when copper was a sell. It's back on now. Copper is a buy. A little bit of background to it. It's would be close to the largest copper miner in Australia already, but it's just undertaken a big acquisition overseas, which will pretty much double the size of the company. So if it wasn't before the acquisition, it certainly will be after the acquisition, the biggest copper miner listed on the ASX, and probably one of the biggest ones in the world, I would think. So it's been around for a while. It has a copper mine in Australia called the Grusser, and it's always been cheap to buy as a stock, Sandfire, for a long time, because everyone had known that the Grusser has a limited mine life. I think it's only got about a year left before it becomes uneconomical to keep mining copper from it. So there's been a lot of exploration in the area around the Grusser mine to look for ways to extend it, but unfortunately that hasn't come to fruition. And so Sandfire Resource Management has taken the decision to invest in overseas copper mines instead. And so they originally bought into one in... they bought into three now overseas. One in the US, they don't completely own it 100%. I think they've got about 87% of a mine called Blackbutt, B-U-T-T-E, Blackbutt in the US. They bought into one earlier this year in the Kalahari in Botswana called Motheo, M-O-T-H-E-O, and they've really bet the farm on a deal with a Spanish company to buy a mine called Matsa, M-A-T-S-A, in Spain. So they know that they can't expand in Australia through the Grusser, so they've been expanding overseas. They did a big capital raise for the Matsa purchase, and that depressed the share price because, as we know, the capital raises dilute the current shareholders, and the share price has to be discounted to take that into account, and so the share price dropped $1.50, maybe even $2 from when they announced that. Although it's turned up and the share price is increasing again now. So either people have had time to digest the Matsa acquisition and are happy with it, or they're just following our sort of thinking, which is that copper is now an increasing commodity again. And basically Sandfire is going to pretty much double its exposure to copper at a time when it's increasing. So it's not a bad bet from a commodity play. But let me go through the numbers, the QAV numbers anyway, and these are based on results which hit Stock Doctor during the week, or maybe the week before, but are very recent, and they don't include the capital raising or the numbers that will come from the Matsa acquisition. So I just want to stress that this is the current company, and I'm going to do my analysis based on that because we don't have others to look at. In 6 months' time, we will have combined numbers, or people, if they want to do their own work and they really want to get into the nuts and bolts, they can go and look at the announcements and adjust the figures based on what we call the pro forma numbers that Sandfire have released about how the acquisition will perform and how it will affect Sandfire as a company going forward. But I'm using the current numbers. The first thing to note is that Sandfire is a large ADT company, and its average daily trade is $6.5 million, so it would suit all sorts of investors. The yield is high, so it's currently yielding 5.28%. Again, it would suit people who are looking for income either to service a mortgage or to live off or to obtain the franking credit, so that gets a tick on our checklist. It's a very cheap price to operating cash flow of 2.44 and a low PE of 6.7 at the share price of $6.02, which it was this morning when I did the analysis. But again, bear in mind that this may change with the Matsa numbers. I haven't done the pro forma analysis, but the current ones are certainly very cheap. The current price is below consensus target and stock Dr. IV, so it scores well there. It's a borderline star stock, so it scores a 0.5 on our checklist for that. And it has strong financial health and steady financial health, which is good. IV2, for my calculation, is $14.28. So the current share price is less than half of that, so it scores a point for that for us. It's also less than the book plus the 30, which is $6.20, and the current share price as of this morning was $6.02, so another point. It doesn't score on the growth metrics because the forecast growth was down 3%, and that kind of makes sense because we know that the Grosser mine is starting to get to the end of its life. However, that number will change when the Matsa numbers get incorporated into the forecast numbers, so we're a bit early on that call yet, but currently it doesn't score. Directors only own 2% of the stock, so it doesn't score for owner-founder. It does have a record low PE for the last 6 halves and consistently increasing equity. So I get a quality score of 89% and a QAV score of 0.37, which puts this large cap stock, large ADT stock, right up there on the buy list at the moment. So that's why I'm calling it out as stock of the week. I guess with the caveat that once we have Matsa numbers, that might change, but certainly on the current numbers, it's worth investigating.